stop scrolling and look at the chart. In late 2024, while the rest of the automotive market was cooling down, interest in the Jeep Wagoneer didn't just grow, it exploded. We are talking about a vertical 188% spike in search volume in just 30 days. Now, if you were a casual observer, you might think Jeep launched a revolutionary new car that everyone suddenly wants. But if you're a US researcher, if you're the type of buyer who tracks interest rates and worries about negative equity, you know that a number that big usually means something is wrong, or in this case, that something has finally cracked. This wasn't organic growth. This was a digital shockwave caused by a massive corporate capitulation. After years of trying to convince you that a Jeep deserves a six-figure price tag, Stellantis, Jeep's parent company, finally admitted defeat. They executed a mea culpa pricing correction that slashed MSRPs by up to $7,000. So if you were looking for a deal in 2025, you were right to be curious. But before you sign a financing agreement on what looks like the bargain of the decade, we need to answer the uncomfortable questions. Is the Wagoneer reliable now? Is this price cut a genuine value, or is it just a fire sale liquidation event to clear out the metal before the brand faces even bigger headwinds? Let's look at the data. To understand why this opportunity exists, you have to look at the failure that preceded it. Back in 2021, when the Wagoneer and Grand Wagoneer relaunched, the strategy was pure arrogance. Jeep wanted to pierce the veil of true luxury. They stripped the Jeep badging off the exterior and demanded dealers earn special certifications just to stock the car. The pricing was the real insult. They positioned the Grand Wagoneer well into six-figure territory. We are talking about top-tier Series 3 models easily exceeding $110,000. They were asking you to pay Range Rover money for a vehicle that shares its service bay with the Renegade. The market rejected it. By the middle of 2024, sales were in free fall. Wagoneer sales plummeted 54%, and the Grand Wagoneer was down 58%. Dealers were drowning in inventory. Reports indicated the Jeep had to throw up to $10,000 in dealer cash at the problem just to move old 2023 models. Even the executives couldn't spin it. Bob Broderdorf, the head of Jeep North America, went on an apology tour in the automotive press. He admitted, on record, that they jumped the gun and that the pricing turned off many would-be buyers because the trucks simply cost too damn much. That admission is your leverage. So what does this correction actually look like for your wallet? For the 2025 model year, Jeep didn't just offer a rebate, they lowered the foundational MSRP. The entry price for the 2025 Wagoneer has been recalibrated to approximately $59,945. That is a critical psychological barrier. By breaching the $60,000 mark, they have effectively removed the luxury tax that alienated families. But here is where we need to talk about trim levels explanation, because usually the base model is a penalty box. You know the drill: small wheels, cloth seats, and blank buttons where the features should be. Jeep used to do this too. Broderdorf called it taking content hostage, forcing you to spend 10 grand more to get the safety tech you actually wanted. For 2025, they unlocked the hostage content. If you buy the base model Wagoneer today, you aren't getting a stripper model. You are getting adaptive cruise control and active lane management as standard equipment. And visually, they replaced those undersized 18-inch wheels that made the truck look top-heavy with standard 20-inch wheels. This is a massive shift in value. You are paying $3,000 less than the previous year, but getting thousands of dollars more in standard equipment. Now let's move inside the cabin. While the value proposition has improved, you have to live with the interior materials. The Wagoneer is famous for its screens. In the higher trims and the new electric models, you are looking at up to 45 inches of total display area. It looks incredible in the brochure. But here is the real-world problem owners report. Piano black plastic and massive glass surfaces are magnets for micro scratches and fingerprints. If you have kids or just drink coffee in your car, that center console is going to look greasy within a week. That is why, if you are buying a Wagoneer, I strongly recommend protecting that investment immediately. There are center console covers and screen protectors specifically cut for this dashboard that can keep that piano black looking new. I've linked a top-rated option in the description below that fits the 2025 layout perfectly. Don't let a $60,000 interior look like a crime scene. Let's talk about what's under the hood, because this is the most controversial change for traditional buyers. The Hemi V8 is dead. Gone. For 2025, the entire lineup is powered by the 3.0-liter Hurricane twin-turbo inline-six engine. A lot of purists are screaming that a six-cylinder can't do the job of a V8. But let's look at the math, because numbers don't have nostalgia. The standard Hurricane engine in the base Wagoneer generates 420 horsepower and 468 pound-feet of torque. Let's compare that to the competition to see where you stand. If you look at the 2025 Chevy Tahoe with the 5.3-liter V8, you are only getting 355 horsepower. If you look at the Ford Expedition with its 3.5-liter EcoBoost, you're looking at around 400 horsepower. The base Jeep engine is beating the V8 Chevy by 65 horsepower. That is significant. And when it comes to capability, the Hurricane maintains a best-in-class towing capacity of 10,000 pounds. So functionally, you aren't losing anything. However, we need to talk about real-world MPG and your cost of ownership. Marketing materials will tell you the inline-six is more efficient, and on paper it is rated slightly better than the old V8s. But twin-turbo engines are very sensitive to how you drive. If you are constantly in the boost, which you will be if you are towing a boat or merging hard on the highway, that fuel economy drops fast. Let's run the fuel cost numbers. Owners and EPA ratings suggest you might average around 17 miles per gallon combined if you were gentle. If you drive 12,000 miles a year and gas is averaging $3.50 a gallon, 12,000 miles divided by 17 mpg is roughly 706 gallons of gas. 706 gallons times $3.50 gives you an annual fuel bill of roughly $2,470. Compare that to the old V8, which might have averaged 15 mpg. That would have cost you $2,800. So you are saving maybe $300 or $400 a year. It's not a life-changing amount. Do not buy this truck thinking the switch to a six-cylinder is going to save you a fortune at the pump. It is still a heavy, thirsty beast. So why buy the Jeep now? Why not just buy the Chevy or the Ford? This is where the market context for late 2024 and early 2025 gets really interesting. The 88% spike in interest for the Wagoneer was partially driven by the fact that its competitors were tripping over themselves. Ford had a disaster with the launch of the 2025 Expedition. They had a stop sale order due to a recall on the electronic brake booster. You literally couldn't buy one for a while. Then you have General Motors. The Chevy Tahoe and GMC Yukon have been battling a federal investigation and consumer complaints regarding catastrophic engine failures in the 6.2-liter V8s. We're seeing reports of engines seizing despite recall fixes. This created a unique window of opportunity. If you are a buyer standing in a dealership in 2025, the Jeep Wagoneer, now $7,000 cheaper, suddenly looks like the safe haven. It's the option that isn't currently under a stop sale or an engine investigation. That competitive weakness is a huge factor in why search volume spiked. We have to address the elephant in the room. or rather the turtle in the room. I'm talking about the all-electric Wagoneer S. This vehicle launched alongside the gas models and contributed a lot to that search spike, but for very different reasons. On paper, the specs are supercar territory. Dual motors, 600 horsepower, 0 to 60 in 3.4 seconds. It has a range of over 300 miles. It was designed to be a Tesla Model Y killer. But the launch reality has been, unfortunately, unfinished. Owners and reviewers have reported serious software stability issues. There is a viral issue involving a turtle icon popping up on the dashboard, which indicates reduced power mode. Imagine spending 70 or 80 grand on a high-tech EV and getting hit with a turtle icon that limits your speed. There are also reports of charging failures where the vehicle refuses to take a charge, and dealerships are struggling to fix it because the technicians aren't fully trained on the new architecture. If you are researching the Wagoneer S, you need to know about Technical Service Bulletin 08127-25 Rev A. This addresses power loss and charging faults. But here is the kicker. Reports say these updates aren't always over the air. You might have to physically take the car to the dealer for a manual flash. If you are a tech-focused buyer, that friction is unacceptable. The search spike for the Wagoneer S is largely people troubleshooting these issues or rubbernecking at the drama. Let's bring this back to your wallet. Cost of ownership is your primary concern. The Wagoneer is currently in a dead cat bounce recovery. Sales were up 67% in Q4 of 2025, but that's bouncing off a rock bottom. Because of this, the incentives are aggressive. Stellantis knows they have to buy your loyalty. Right now, you can find select inventory bonus cash of $2,000. If you're a current owner, there's another $1,500 in loyalty bonus cash. And for the electric Wagoneer S, they're applying the $7,500 federal tax credit as a capital cost reduction on leases. This creates a lease loophole. When you stack the dealer discounts, which can be massive because they are sitting on inventory, with the tax credit, the monthly payment on a Wagoneer S can be mathematically attractive, even if the car has quirks. But a warning on depreciation. The 188% spike is built on discount, not desire. The brand is trading on low prices. If the quality issues with the software and the new Hurricane engine persist, the resale value of these 2025 models could drop like a stone. Do not pay over MSRP. In fact, do not pay MSRP at all. This is a buyer's market. So here is the bottom line for the US researcher. The 2025 Jeep Wagoneer is no longer a six-figure pretender. It is a properly priced, full-size SUV that beats the Chevy Tahoe on horsepower and undercuts the Ford Expedition on price. The removal of the hostage content strategy means the base model is actually a viable daily driver for a family. However, the recovery is fragile. The electrical gremlins in the Wagoneer S are a red flag for the whole lineup's software architecture. If you need a tow rig and you can find a 2025 Wagoneer with the Hurricane engine for under $60,000 before incentives, it is a compelling value proposition simply because the competitors are broken or stopped. But if you are looking at the high-end Grand Wagoneer or the electric S, proceed with extreme caution. The search spike proves people are looking, but it doesn't prove the problems are solved. Check the TSBs, inspect the paint, and for the love of your bank account, negotiate hard. The dealer needs you more than you need them. If you found this deep dive helpful, hit that like button so the algorithm knows you prioritize data over hype. And let me know in the comments, would you trust the new Hurricane Inline 6, or are you holding on to your V8 until the bitter end? I'll see you in the next one.